FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is 3/17/20. Well, market has taken a huge hit, and is it just going to keep going down forever, or is this temporary and nothing to worry about? Just let it go. Well, that is the question. And we don't necessarily have the answer, but we do have lots of opinions. And the next opinion you're going to hear is from Jerremy A. Newsome. And Jerremy, you've been involved in the market for a long time, and you've got a strategy for this. So welcome to the show. And if there's any questions, comments, or feedback, or you got a question for Jerremy, why don't you just email us, kl@kerrylutz.com. So Jerremy,
yes, sir.
Hey, describe, in your opinion, what happened over the past week in the market.
Yeah, it's really been, honestly, what's very interesting about this particular moment in the market, and I love the name of your the podcast and the show, because that's really what a lot of people need to do right now, is focus on kind of that survival, but also understanding and educating themselves a lot about the market. But really what happened, man, is you had this very random, kind of scary approach, virus term, COVID-19, that a lot of people just don't fully understand or totally recognize. But it's been around for a long time. I mean, if you look at any Lysol white bottle, it talks about it protects or prevents or cleans the bacteria from human coronavirus. So this is something that people have known about. It's just a strain of the flu. And it's terrifying people, it's scaring people, but the media has really had a great opportunity to portray fear and to strike fear. And then you're discussing like it sweeping the nation and going off across all of America and all of the United States and different countries, and Italy and Spain are shutting down. And what's very interesting, it caused the Federal Reserve to now lower interest rates and do more quantitative easing. And I don't know if it's going to stop it right now. So my overall prediction is that we probably have not seen the absolute bottom of this move. That's just my thought. I do think we actually can go a little bit lower. 15 or 20% lower is kind of my thought, ironically enough. So it's a great time to be day trading because volatility is amazingly insane. So if you're in cash every single night, you're going to sleep a little bit better. Or if at least you have a cash position, Kerry, like where you say, okay, I have a bunch of long-term stuff, but here's an account that I have $50,000 in. So let me kind of day trade and just kind of take advantage of the overnight moves. Or you're trading futures and you're actually a part of the movement overnight. So there's definitely ways to get a stranglehold and to kind of capture some cash flow from this wild environment.
So how risky is what you're describing? How risky is that?
That's a good question, man. I mean, a lot of people actually do think that day trading is extremely, extremely risky, but it's generally not if you know basic math. Because my main goal of helping traders is to help them understand the risk mitigation behind any type of trading, not only day trading, but just all forms. So for example, I'll give you kind of a breakdown. So today we took a trade on Tesla. And Tesla's a pretty popular stock. Everyone's very familiar with it. But Tesla was down, I think, around 19%. 17% at one point during the day. And I was thinking to myself, man, this is a really popular stock. A lot of people are super excited about this company. I feel like it could have a short-term bounce. So I'm looking at the chart. I'm looking at a 5-minute candle chart at this particular point, Kerry. So I'll give you a 5-minute time frame. And I zoom into the chart. I'm looking at it, and I go, okay, if Tesla goes above this price, I'm going to buy it. If it goes below this price, I'm going to sell it. And off the top of my head, I believe that the numbers were, I was going to buy it at 470, and I was going to get out if it broke below 450. So that sounds wild, but that's a 20-point move. So then what you do, Kerry, is you take 1% of your risk, whatever 1% of your account is. So let's say you're trading $50,000. 1% of $50,000 is $500. So you take $500 and divide it by 20, and that's how many shares you would actually take in this particular example. Therefore, limiting your risk to only $500 of the trade just absolutely does not work at all.
Mm-hmm. Interesting. So how did that trade work?
It actually worked out okay. So what ended up happening is I sold it at about 485. So I made 15 points on it. So I risked 20 initially, and then I made 15 points on those shares. So that's what I would refer to as a 0.75 risk unit win. Because initially, if you're taking your money up front and you're going, okay, I think that this is the most I'm willing to lose, you can still increase your stop or increase your limit throughout the day. So my overall objective, Kerry, is really to help people kind of demystify a little bit about day trading, because it's not as terrifying as most people make it out to be. The difference between day trading and gambling is gambling, and I love gambling actually, but gambling is if you go to a roulette table and you put $3,000 on red and it hits black or green, you're toast, right? You don't get any of that money back. But on Tesla, if you buy 100 shares of Tesla, so you're investing, $40,000 into a position, you can win or lose, but you can take your money off of the table that exact same day, regardless if the trade works or not. So you're not going to lose all of your money on that particular trade if you mitigate your risk appropriately.
All right. So do you ever trade options in your day
all the
trading?
time? Yes, definitely trade options.
How do you?
I love trading options. Go ahead.
So why didn't you trade options on Tesla instead of actually buying the stock?
Ooh, that's a good question, man. So I did have options on it. I'm currently long the April week 1 540 put option. I think Tesla has a really good opportunity to go down to approximately 380 in the next 2 or 3 weeks, which would be a pretty massive drop. It'd be about another $100 drop from where it is. So I am long puts. I thought about going long call options, but it's Monday. So generally, I like playing, if I day trade options, Kerry, I kind of prefer to day trade options on Wednesday, Thursday, Friday, just because they're a little less expensive, right? Because the theta has declined, the implied volatility is not necessarily as high, and it's just a little bit less expensive. Monday, Tuesday, I generally focus on more shares because it's just, you have the buying power and the margin in most accounts. If you have a margin account, you can get 1 to 4 buying power for day trades. So generally, it won't be a problem if you trade shares.
I see. Interesting.
Yeah. Plus, the bid-ask spread is always tighter on shares, and there's no implied volatility that can just randomly creep up. There's no theta. So yeah, I generally, if I'm day trading, prefer shares because it's easier, in my opinion, but I'll definitely do some day trade options.
Okay, so with the options here, though, a stock as volatile as Tesla, you're going to pay a little more in premiums, but what if you're doing the weekly out-of-the-money puts or calls?
FSN Radio. It's all about what's next.
Financial Survival Network is brought to you today by Orin Resources, a junior exploration company with the appetite of a major. It's hot on the trail of the next globally significant discovery, creating enormous potential upside for you, the shareholder. Orin is one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits, and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. Orin's unparalleled technical team and highly experienced management has a history of success in advancing and monetizing exploration assets. No wonder Orin's been called one of the best in the junior exploration sector. Orin trades on the TSX and the NYSE under AUG. To learn more, go to orinresources.com. That's AURYN resources.com.
The Financial Survival Network. It's all about what's next.
That's a really good question, man. So it kind of just depends on how far out you're going and really your risk tolerance. Bottom line is if you have a really good beat on the stock and you're comfortable with playing an out-of-the-money put or out-of-the-money call, I'm totally fine with that. It's just all about how much volatility you're going to get and your general risk tolerance. Because if you do trade out-of-the-money calls or puts on something like Tesla, as long as you know your risk and you're comfortable with it and you have a good stop in place, personally, man, I'm fine with it. It just all comes down to risk. Because last week I was playing the $500 put Friday. So Friday, Tesla was up, it gapped up, I think, to like 560, 570, something like that. And I was playing the $500 put expiring the same day. And I bought it for, I think, $1.50. So if you buy something for, let's just say $1.50, well, the good news is, Kerry, and you already know this, but maybe your listeners, maybe one person might not. But what's really great about options is if you buy an option, your maximum risk is actually controlled within, you can only lose 100% of your investment. Now, it sounds like a lot of money, but if you're like, okay, I only want to lose $500 on this trade, and the option is trading around $1, well, you could buy 5 contracts, right? You buy 5 contracts, you're going to spend $500. Worst case scenario, the option goes to 0 that day or later that week or whatever, and you lose $500. Best case scenario can be ridiculous because that option that I'm referring to, that $500 put on this past Friday that just happened, Kerry, that option, it went up to $22. So if you bought it for $1, you would have actually, I don't even know what multiple that is, but it went up to $22. I mean, that's a substantially huge win on a very small risk.
I think that's 2,100%, but who's counting?
Yeah, exactly. No big deal. But yeah, it's kind of wild, but you're absolutely right, man. As long as the risk is controlled, you don't get too overly financially zealous, you don't put too much money down on any one given trade, I think it can work out very well if you have a good idea on the direction.
Yeah, I can see that. So what kind of temperament do you need, though? Because not everybody, as we know, can be a trader.
Oh, man, that's a good question. So I'll break it down. I'll give you a profile of someone who's an amazing trader, and I'll give you a profile of someone who's going to struggle. So the greatest traders I know are women, and their temperament generally is a lot more calm. One of the greatest traders I know is actually a middle school teacher. So if you think about it, so a middle school teacher, right, they have incredible patience. They have really good time management. They probably have good money management. They most likely want to make a lot more money, so they automatically have that drive a little bit. But they aren't really controlled about being right or being wrong because they can deal with flexibility and hysteria pretty frequently. So they're generally more calm and relaxed, and like they can be very bendable and very flexible, and they can kind of go with the flow, and they're in and out. They don't care about being right or wrong. The traders who have the hardest challenge of making money long-term in the market are generally dudes like me and you who are either business owners, doctors, lawyers, or engineers, because they have like a very, very scientific, mathematical, analytical, exact approach. And there's nothing wrong with that in life, but the stock market doesn't care. There's very, very few things in the stock market that are absolutely 100% mathematically concrete at all times. There are a few, but there's very few and far between. At some point, you do have to have a little bit of an artistic flow with the market, and you can't be massively scientific, if you will. So those are some profiles that can be a challenge, but they can absolutely make it. It's just you're going to be fighting an uphill battle. Musicians that have a lot of money, oh man, they're so good at trading because musicians, they're more artistic, they're more flowy. You know, when you're reading a chart pattern, when you're able to look at it, it kind of in a way can look like musical notes. So if you can learn how to read sheets of music, I can guarantee you can learn how to read the price action of any chart. Interesting.
So it replicates. Did you make any money in the past 2 weeks?
I did. I'm actually up $22,000 today. I made $33,000 on Friday. I made $14,000 Thursday, $7,000 Wednesday. I can't remember about Tuesday, Monday. I have to look. But yeah, I think I'm up over $100,000 in March so far.
That's pretty good. It's pretty good. So the volatility is the key.
Volatility is the key, man. Yeah, for most traders, Kerry, we don't really care about the direction. I personally will be very upfront. Like I thought that we were going to bounce weeks ago, but when specifically last Tuesday, Kerry, when we did it, when we took out the low of Tuesday in the market, that's when I was like, yeah, guys, this is for real. Like this is a big problem. So pretty much a week ago is when I got very, very bearish. A week and a half ago, I was up in New York City. And I wasn't fully convinced, but that Monday when we gapped down and had that really big, limit down in the futures for the first time in a long time, that's when things started kind of coming together and clicking. So, yeah, man, it's going to be interesting to see what happens from here. But I think you're right. I think we have a little bit of a lower low to go. What do you think, Kerry?
Yeah, well, I'm not the expert on this, but I think we could have met our low. It's possible, but we're not going to know until it tests it, right?
Agreed. Yep, totally agree. Totally agree.
Test of that.
Because the low came in like today, if you're counting it, like we hit our circuit breaker today. The market was down 10%. So at open, the market paused for like 15 minutes.
Right.
So today's low, the low could absolutely be in. Trump is going to come and do like a speech of some kind in the next 20 or 30 minutes. So we'll kind of see his general thoughts and his perspective and opinion. But like you mentioned earlier, man, volatility is just, if you're going up or going down, as long as there's some sort of movement and you have a really good risk control, you can absolutely make money trading. And I think it's a phenomenal career opportunity. It's a really good hobby opportunity. It's a good possibility, especially for people who have to stay at home right now, right? A lot of your listeners, they might have to be staying at home, or they might have to have some type of flex commute or schedule differentiation where they have to be at home rather than at work. This is a great time to learn and start slowly tiptoeing in to this field, because with the internet speeds the way it is, with the commissions from the brokers as cheap as they are, it's opened the door for so many people to be involved.
Yeah, so I was under the impression a lot of brokerage houses aren't even charging commissions anymore.
They're very inexpensive, yeah. So for option trades on Thinkorswim, they're like 65 cents a contract. A lot of brokers are totally free if you're trading stock. So yeah, man, it's really not that much. You're absolutely correct.
All right. So how do people find out about you? How do they connect with you on the web?
That's a valid question, man. I appreciate you asking. Realistically, I would just say hop over to YouTube. That's kind of like my main social media outlet. And just type in the company Real Life Trading, just like it sounds, REAL Life Trading. And feel free to watch any of the content that pops up. I've done my best to create a lot of free content because I love helping people, man. I love educating. I'm excited about this. I went to college to learn how to do this. They didn't teach me anything about the stock market. So I felt like it was my opportunity to self-teach myself, to self-teach, to self-learn, to go out, get some mentors, pay a lot of stupid tax, do a lot of really dumb things, learn from them, and then teach other people how not to do those things. So we can all kind of just slowly carve out some profits together, maybe obtain financial freedom, or at least a glimpse of financial freedom, pay off our debts, be amazing contributors to our community. So
Sounds
yeah, man,
good.
reallifetraining.com, anywhere on the website, YouTube, all that good stuff.
All right, cool. Well, we'll have a link to your site on our site, financialsurvivalnetwork.com. In the show notes, just click it, take you over to Jerremy's site, and you can send us an email, kl@kerrylutz.com, Twitter feed @kerrylutz, Facebook page, Financial Survival Network, and that's our website as well, financialsurvivalnetwork.com. Jerremy, I appreciate you coming on, and
man, my pleasure.
We'll keep track of you, all right?
Thanks. I appreciate it, Kerry. Have a wonderful rest of your day, and all your listeners, thank you for the opportunity.
All right, you take care.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.